Good afternoon. This is Chris Robinson with Robinson at Marketing. With today's post-close grading last comments. Well, lower across the board, we filled a bunch of gaps. Very, very technical. We finally filled the gap in January beans, um, down there at 1063. I would not be surprised to see some bottom fishing coming there. We know we just broke $1.04 in the last 18, 19 days. That seems to be like, probably cleaned out a lot of people that were got long beans for all the wrong reasons. Um, there's a lot of speculation out there as to what's going on with the managed funds because the commitment to traders data is delayed. I can tell you, I'd be very surprised if they're still long a bunch of beans, or if they're long a bunch of beans, they've got puts against them. So I think it's going to be a non-event. It might be interesting when we get through the January options expiration because you're not going to put 150,000 contracts on with not having some downside protection. I have news for you. So those guys were hedged, I'm sure, at least on half of it. So we'll see. Are they going to wind their way out of it? Probably, but you got to remember they've. I'm sure that they were hedged with puts, and that's a strategy that these big money managers use. You should use it too. I mean, they didn't reinvent the wheel. It's a simple strategy. You've got downside risk. You buy the put just in case we have a dollar for collapse in 18 days, while the news media and everybody else is pounding their chest saying, "Look at these sales," and so on and so forth. March corn, same thing, and we've had great um, exports with corn, but March corn can't stay above the 200-day moving average. So I don't know why, and I'm not going to worry about why. I just know that until we can get above 450, 460, March corn's going to be under pressure. So I would expect sideways garbage trade between now and the end of the year. The next hurdle is going to be the January 12th report. You're going to hear me say that a lot. Um, I would say this time of the year, markets get very thin and choppy because anybody that's had a good year is not going to want to butcher it in the last 2 weeks. You may get a lot of a little bit of volatility, more so than usual, because less people are interested in being involved. The people that are trading right now are people that are trying to make up for a terrible last 6 weeks, which would probably be anybody that was long beans because they're going to try and salvage the rest of their month. Um, and I'm looking at the wheat. We talked about this for a long time. We're down there testing contract lows again. In wheat, we actually made new contract lows in March. Um, Chicago wheat, we took out 511. Now it's going to be, do we stay above $5? I would doubt it. It's too tempting for the speculators to go down there and see what happens if we hit wheat with a four in front of it. We've talked about that for a while. Got to remember, we had a nice rally in October. Um, Go back and look. November 6th. We had a 50, 60 cent rally in the wheat. That was kind of like the last train out. And that's the hardest part about marketing. It's when you get those 50, 60 cent rallies, you want to get bullish. You think, oh, here we go, here we go. And the market pulls the rug out from under you. I think that's the hardest thing for most people to understand. Um, and it's probably going to continue here. We don't have a weather story yet. We don't have a fundamental demand story yet. We're well supplied. And those are the battles that we're going to be fighting here for the next 2 to 3 months. No two ways about it. You do have crude oil hit a new 5-year low today. We went under 55 bucks for a second. We're basically sitting there. I think there might be one more shoe to drop, but they did go down and make a new 5-year low. That's got a silver lining. It's given us 212 diesel. 3, 4 weeks ago, we were 50 cents higher. We were up at 270. So where's the silver lining in the sell-off? There it is. Um, the one thing that I would look at for end users who use meal, right? If you feed out a lot of meal, we've had a little bit of a bounce here. We basically gave back half of the rally. What rally I'm talking about? Well, October 15th, May meal was trading at 288. We hit a multi-month high at 338. Now we've given back half. So if you're an end user, if, every month you have to write a check to buy meal to feed your animals. I'm not saying it can't go lower. I'm not promising you if you buy it, it's going to go higher, but you definitely want to buy it on a flush when nobody wants it. I would say the same thing about the grains too. If you happen to make sales beans on that rally, or if you're an end user, I like buying calls when nobody wants them. The same way back when we were at 18-month highs in the beans, I was telling guys to use those highs to um, defend the revenue gain. Not because I knew we were going to turn. People always want to go down that route. I'm not saying that I'm some Svengali with a perfect crystal ball, but I've been trading these markets for 30 years, and I know when you get a dollar 50 rally, it can open up the door to a repricing event, and that's what we had. Now, where we're going to be 3, 4 months from now, I have no idea. But I do know this: people that work with me are going to be hedged. We're going to be balanced. We're going to be looking to make better cash sales. I have no idea what 2026 is going to hold for us. Neither do you. And the people that get burnt most are the people that get locked into an idea, locked into a position, get their ego attached to it, and then get smoked. So I try to not do that. That's what I've learned in 30 years. Don't get smoked. It's one thing to have an opinion. It's another thing to have your opinion destroy your bottom line, right? Finishing up with the protein complex, higher across the board. We're up into the gap. Are we going to go fill the gap in March? Our feeders, up at 45. Are we going to fill more of the gap in the fat cattle in Feb? We got to get above that 232, 233 level. We will see. Same thing I would say to everybody else. When we had those 18-month highs uh, in the beans, like, hey, I'm not calling a top, but we just clawed back $45 of an of an $83 collapse in feeders. So we've clawed back a little bit more than half. Don't let that slip away. Who am I to say that? First of all, who am I to say that we can't go back to the highs? I can't say that. But what I don't want to be doing is giving away potentially um, this $45 rally. $45 on a one lot in the feeders is 20 grand. So if that 20 grand's worth it, I would definitely hedge it. And again, hedging is not calling a top. Please don't throw that at me. Okay. And if you want to learn more about hedging, take a look at my letter. You can call me directly, ask me questions. Looking forward to hearing from you. So, on that note, have a good rest of the night. We'll be back at it tomorrow. It's going to be a lousy week, I can tell you, because it's holiday weeks here. We'll probably have trade in the morning, for the first 10 or 15 minutes, and then quiet trade all day, unless we get some sort of news story out there. And right now, that's not out there. So the thing I would concentrate on are the fact that crude oil is at 5-year lows, the fact that diesel is at 6-month lows, right? And have a plan. Having a plan is 90% of being able to take advantage of it when something happens. A lot of speculation going on with now what's going to happen with the dollar. Um, Warren Buffett was talking about, he thought the dollar was in trouble. If that's true, if the dollar does take out the lows that we were at back in September, that'll be 3-year lows. That should help our exports. So if you're searching for, potentially bullish things, a weaker dollar might help that. The number one thing we need for higher prices is a weather issue, right? We need a weather issue in South America. And right now, that's not showing up. All right, this is Chris. Have a good night. Thanks a lot. 312 638 8868.